Gold prices took a big plunge lower, about $30 from yesterday's settlement, all on some easing political and trade tensions that have been driving the market higher. And lo and behold, we saw this big move come very quickly, came today, and we are still not in bear territory after we matched what we saw in August, sort of a very similar trade when gold was down big on easing trade tensions. Now we're seeing it again. So that's kind of a theme here. When trade tensions start to look very rosy, risk on or risk off assets start to look a little less positive. And we're seeing that very clearly in gold pricing today. All metals actually. And it looks to me as if gold's going to hold steady near that 1500 level for a little bit and wait for the next what if moment. Is that going to be an actual trade deal? Is it going to be something coming out of Washington with all this rhetoric about impeachment? Is it going to be some kind of a Fed announcement? Because the Fed has been eerily quiet here as we have trade, China-U.S. trade talks and impeachment talks. The Fed has been very quiet in the background, probably something they've wanted to be for quite some time, but haven't been. They've sort of been forced to center stage. But gold prices right now, a big decline today. No surprise given where the dollar went. Dollar had its biggest one-day move. The dollar index had its biggest one-day move since July, fifth highest of this year. So yes, a very significant move in the dollar. While we do see political tensions easing, we do see some of the trade tensions easing, there is still a lot of uncertainty. And when you talk about political tension, not just here in the United States, have it over in the UK as well. We've got global growth issues still looming. And I think at this point we had one Fed President, Mr. Evans, right here from Chicago. He talked about maybe not needing any future rate cuts. That's very odd coming from a noted Fed dove. So at this point, the dollar very strong. Gold and the dollar back on their historical trade, which is dollar big up, gold big down. We haven't seen that kind of trade in a long time. They've been moving very much in the same stream, with the dollar moving higher and gold moving higher at the same pace. But today, obviously, all that separates and we go back to the old ways. And if you want to guess as who were the big sellers today, well, the speculators, they were very long and continued to get longer. So my sense is here is that speculators were leading the charge lower. Volumes were very high today, so it suggests that there was some exiting going on. And like I said, we held above that 1500 level, which is a very significant. On a settlement basis, likewise, we haven't seen the trade lower. So at this point, I think 1500 will keep us out of the bear range. Now, once we get below 1500, it's going to change all that on a settlement basis. We haven't done that yet, so let's wait and see. Let's breathe. We obviously have still a lot of uncertainty out there and a lot of open-ended what ifs that maybe are starting to look a little nicer, but certainly haven't really sealed the deal yet. So at this point, we're seeing a risk on trade with Treasury yields going higher and gold prices going lower, the dollar catching a very aggressive bid. It's only midweek. We don't have a whole lot coming out the rest of the week, so all this focus remains on the headlines. We're going to keep watching for China-U.S. trade deals. We're going to keep watching what's going on in Washington, and then next week we'll get back to the economics with unemployment.